My topic today is something quite close to my heart, from ESG to ESG, in fact, how to actually integrate sustainability with some of the things in finance and economics. And I think this is something that I feel quite passionate about for perhaps in the last 1 to 2 years. I've been writing and lecturing and giving talks on the topic. So sometimes I may speak more from my heart than from my head. Let me first of all illustrate with a fundamental dilemma in this topic. This is the fundamental dilemma facing all business. Okay, and I want all of you to participate. Suppose you have a little bag full of money, coins in a room, and then you have a little cat. I'm not very good at drawing. This is a cat. Okay, you have a cat in this room. Suddenly there's a fire. You are alone with a beautiful, cute little cat and a bag of money. You can only rescue one item. Which item would you rescue?
Cat.
Cat? Who said cat? Okay, I think you must be quite young. Okay, cat. Who else? Anybody? Okay, yes.
Take the money because the cat will follow me.
Oh, take the money. It's very practical. Okay. So you can say, okay, just a little bit.
The cat will follow.
Who sent the bag of money? Money bag. Put up the hand. How much? Who said the cat? Put up the hand. You have half. And I think this is actually the trade-off, the most basic trade-off in sustainability. And what is this trade-off basically? And I'll go straight to the point later on. The trade-off is between value versus values. Correct? That's one of the trade-off. The second trade-off, maybe I would say materialism versus humanism. Something of higher quality for human beings and something that's to the material, that's money. Another trade-off is actually finance versus sustainability. The usual, the traditional way we define sustainability. Later on, I come back to this again. And so one of the key challenges, and I will now start to raise as fast as climate change. What sustainability? I think the recent attention, the recent challenge is show me the money. Show me the money. Don't just tell me to be sustainable. What benefits does it bring? What benefit does it bring to my business, to my organization? Show me where the benefit is. So, so over the years, in fact, just recently at the turn of this year, all of us know, and in fact, I was totally shocked, when the inauguration of the leader of the world's largest economy, the commander-in-chief of the world's largest army, said during his inauguration, we will drill, baby, drill. And then, just also very recently, what have we seen? BlackRock. You know BlackRock? The world's largest asset management company. The leader is Larry Fink. And he said, ESG has been weaponized. It has now outliving its usefulness. In fact, very, very ironically, BlackRock has blacklisted the word ESG. He was there before Trump. He was earlier than Trump. And in fact, even when he was there, his research head saying ESG biggest sin is conflating finance, impact, and ethics. Conflating means confusing. Confusing in a very, very ambiguous way. Okay. After BlackRock, what happened? The backlash continued. Recently, in the last 1-2 years, big oil company, for example, look at just one example, ExxonMobil, including Shell, including other big oil, Chevron as well. in many of the AGMs, the company has shot down any activist request for the company to be sustainable. So for example, in ExxonMobil, activist investors want ExxonMobil to cut down carbon emission, and actually ExxonMobil said no, will continue to be profitable. So there are so many tensions with this. I think the natural question for all of us here is, the famous acronym ESG. Is ESG dead? Should ESG be changed to an acronym RIP? Rest in peace. Is it game over for ESG? So I think all these tensions have been coming up, yeah. And just exactly 1 year ago, at the invitation of our national daily news, the Straits Times, I put up an article that actually make a very publicly to business that let's move away from ESG. We should have the complete specification. Complete specification meaning let's put in the economics, put it into the same equation, put it into the same objective function, and not just an ancillary constraint. It should be together in the same calculus. So I made many arguments, and I think in this short lecture, what I'm trying to say is businesses, organization will have to traverse, will have to evolve in what I call the 3R approach, the 3R of sustainability, literacy, the 3R, right? Read, write, arithmetic. So I think going forward, this is the new literacy for sustainability, my own 3R approach for companies, businesses. The first R, responsibility, risk, return. Let me go to R1. In the past, we always say, let's be sustainable. By doing so, you can be responsible. We have CSR revolution for many years. But is it reasonable to expect businesses to be sustainable, to be so altruistic, to be philanthropic, to do good just for the sake of doing good? So that's not good enough. We need to move in the second R, and I think this is something that happens in the last few years. R2 is the risk approach. Risk meaning companies go into sustainability, take care of climate change, actually to reduce their risk profile, to reduce their risk posture, so that, for example, and in particular, they will attract, say, lower cost of capital. The cost of financing has gone down. So this is actually the cost side. But that's not good enough. The complete literacy will necessitate businesses to go on to the third R, which is return. I think now if we can marry return with sustainability, it is something very good, and this is something which I've been doing quite some time already. In fact, even many years ago, I've been making very early plea that we need a business case for climate change. Don't just tell companies, don't just tell businesses that we need to act responsibly, we need to reduce the risk of climate change. Show us the money. So we need a business case, yeah? And I think there's something, along the way, our research center, CGS, at NUS Business School, Center for Governance and Sustainability, has embarked on many studies in this area. So this is just an illustration. 2 published reports that we put up, that number 1 demonstrated that there's a positive significant relationship between sustainability and number 1, which is stock market value. Number 2, there's a relationship of sustainability with brand value, which is something calculated using established methodology of brand equity. There are some links here, but very interestingly, we have to do this study. But just recently, in the last 2 years, me and one of my master students have even published another report that say that despite the general relationship, if you look at just one vertical sector, not big oil, related to it, palm oil. For global palm oil companies, we found something very puzzling. If the palm oil company is sustainable, there's a discount to their valuation. So in other words, investors want palm oil companies to chop down forests so that they can make profit. So again, the E, the economics is very important, and I think the very important thing is here, despite what is happening in the world, despite Trump 2.0, despite the world, I would say the world -1, that -1 is the USA. USA used to say we need to have China +1, but now they have gone into world -1. I think it's going to be here to stay, even with all the regulations that have been established and entrenched in EU, global standards, global regulations, including recent one like from IFRS, ISSB. So for Singapore, for many countries in Asia, all of us are supplier to someone. We have to actually demonstrate our footprint. So within the 10 minutes, let me just give a parting shot. The parting shot is this. Watch the front, yeah. The color of money. What is the color of money? The color of money is green. This is, I think, the ultimate calculus. The key message today is go beyond ESG. Let's go for EESG. Thank you very much for the masterclass.